Great, thanks. Karen.
Uh, I am Karen Nesmith, and I am representing Tampa Bay Presbytery. I'm honorably retired, and used to be in the mortgage business before I went to seminary. So insurance is part of my wheelhouse in a way. So that was why I was interested in being asked to come to this table.
Great. Awesome. Thank you, Karen. Darius?
Yeah, I'm Darius Poltina, and I serve the Presbytery of Tropical Florida. And I am delighted to be here to kind of represent our presbytery. I also should disclose up front that I am a member of the board of directors of the insurance board.
Yep. Thanks, Darius.
Yeah.
Jules?
Hi, I'm Jules Anderson from Charleston, South Carolina, and with Charleston Atlantic Presbytery. I should have been honorably retired some time ago, but I'm still working. But I also have some insurance background. I have an agency here in Charleston, and we have place business through the insurance board for both Presbyterians USA and Lutherans and Church of Christ and a couple other minor denominations.
Thanks, Jules. Milana?
I'm Milana Scruggs. I'm the general presbyter for Peace River Presbytery, which is Southwest Florida. I said that right, didn't I?
Yeah. I just don't think about it too.
All of a sudden, I'm thinking Missouri, and anyway, I have learned everything I've learned about insurance through hurricane damage. So here we are.
Thanks, Milana. Camille?
Good afternoon. I am a member of the Cherokee Presbytery. I'm here on their behalf and on behalf of the congregation of Silver Creek Presbyterian Church, which I serve. It, like Susan's church, is in Rome, northwest corner of Georgia. We don't suffer hurricanes, although we are in what is known as a tornado alley. So.
Thanks, Camille. Tom?
Yes, I'm Tom Sharon. I'm on here representing the New Harmony Presbytery in Florence, South Carolina. I'm a member of the John Calvin Presbyterian Church in Florence.
Thanks, Tom. Hoover. Last but not least, Hoover.
Yeah, least in land. This is Hoover Haney, Central Florida Presbytery, one half of co-interim exec presbyter team. I'm on as a representative from the presbytery. We have two elders who are also on the listing. So where they are, I'm not sure, but it's good to be with you. Thank you.
Thanks, Hoover. Okay, guys. Thomas, Morgan.
All right, our turn. So I'm going to try to share my screen here quick. So bear with me and let me make sure I can get this to happen. And is everybody seeing my screen right now with the presentation?
Yes.
Okay, I'm going to start from the beginning. Everybody still seeing that?
Yes.
Yes.
All right, that's a win for me. All right, so real quick, I just want to get into exactly what our agenda is today. Then we'll do a quick introduction and kind of dive into things. So quick agenda, give you a little background on who Morgan and I are and Brown and why we're here talking to you today. Talk to you about group affiliated programs, a gap overview, the gap structure, and the options that could potentially be available for the Synod. Talk about some CAT structure and options, and then some guidance onto potentially getting started if you would decide to move forward with potentially getting quotes and forming a program, how that would operate and how that would work. So my name is Tom Bender. I am the religious organization team leader here at Brown & Brown. I've been in the insurance world for about 10 and a half years now. About 5.5 those years have been here at Brown and Brown as the team leader for the religious organization team. So have been helping out the churches here for quite a while and have seen a lot of different things from across the country with different churches. So it lends to some good conversations for our churches and for the organizations we support. Morgan, I'll let you go ahead and introduce yourself.
Sure. Morgan Thomas, guys. Been with Brown and Brown for about 6-7 years. In the overall insurance industry for just over 10 years, like Tom. And I have a unique background. My parents were both ministers growing up. And my father was a UCC minister. My mother was a Lutheran minister. I grew up in our parsonage. And I coached football after I graduated college for a few years and realized that it would be kind of difficult to support my family, only being a part-time coach. So led me into the insurance path. And I thank Tom for bringing me on board at Brown and Brown, the religious organizations division, which really, frankly, for me was a really natural fit. I love churches. I enjoy being around churches. Obviously, I grew up in the parsonage. So for me to have that ability to transition into this role was something I'm very thankful for.
All right, and we'll move on to the next slide here.
So a little bit just about us, Brown and Brown. Obviously, I'm sure most of you are familiar with who we are. We're headquartered out of Daytona, Florida. We're one of the top 5 agencies in the United States, and we have about $4 billion in revenue that we do on an annual basis. We do have over 350 locations, and Tom and I in our division work with the Atlanta, Georgia office quite often and their complex property team, risk solutions team down there. But we have been providing service for over 80 years, again, based out of Daytona. And what makes us different than some other larger agencies is really our specialization and our decentralization. So Tom and I's office here out of Brown and Brown, Lehigh Valley, we are like the national practice leader for religious organizations. So if there are offices that are in California, Texas, all over the country, and they have some struggle or they need some insight, they do reach out to us. A lot of the times we work on the carrier relationship side of things with those different profit centers. But out of our office, we have over 2,000 clients that we currently work with, over $500 million of premium. There are 115 teammates that sit here to work for our members. And we have kind of specialized in group program construction for religious organizations, as well as health and human services for the last over 30 years.
Awesome. Thanks, Morgan. So let's get into the main topic of conversation today. So what we wanted to share was more information regarding what's called a group affiliated program or a GAP program. We've had discussion with some of the others members of the Synod, and we're asked to come back to share some more information today. So just wanted to share exactly what a group affiliated program would look like and what it means. So basically, it's a group of the churches coming together to form a group program of insurance policies. But in this case, each participating member receives individual policy limits, both property and liability, and there's no shared limits. So it's not just one solid group of churches where you have one limit that you're sharing from a liability standpoint or one mass property limit. Every church has their own individual policy limits. The participating members within the program are rated on an individual basis. So the individual characteristics of the properties and the liabilities that are at each church for each member are factored in when rating. But the nice thing is when we're coming together as a large group, whether it be a presbytery, a state, or the whole synod, the way they rate you is going to be different than how they would rate you on a standalone basis. Because as with anything, when you have purchasing power in a group like this, they're able to come together with some better premiums for the overall group, even though it's rated on an individual basis. All claims are reported and paid under each separate policy. So while we are coming together as a group, the claims and everything for that individual church may remain with that individual church, and they're paid out under each separate policy for the church. There can be standard minimum coverages developed by the Synod with the support of us, and can be arranged to ensure all churches are insured at a certain level. So one thing that we've come across is that The different presbyteries typically want to make sure that each one of their churches has certain liability limits in place and certain coverages in place to make sure they're not leaving any potential for uncovered claims that could potentially roll up to from the church to the presbytery level or from the presbytery level up to the synod level. So we can set kind of a standard minimum coverage that each church in the program would receive from a liability standpoint. And we'll talk more about that a few slides away here. And then all participating members receive their own invoice, and individual members are responsible for paying their premiums. So again, there's different ways to set up different programs. There are certain programs that can be set up where everybody is under one policy, and then the synod would be responsible for paying the premiums for that policy and then collecting money from the individual churches. That's not what we're looking at here. What we're talking about is the individual churches each get their own policies, they each get their own invoices, and you're responsible for paying your own individual premiums. So our group affiliated program carrier partner is Guide One Insurance. I don't know if everybody's familiar with them or not, but they are endorsed by the Presbyterian Church USA Office of Risk Management Services, licensed in all 50 states, AM Best financial rating of A-. They're specialists in writing insurance for religious organizations. They also do insure a lot of other nonprofit organizations as well, but religious organizations is one of their main focuses. They have a robust risk management and loss control services, and I'll get to some more of that here as we move forward. And Guide One currently insures our GAP program that we have in place now for the New Jersey presbyteries. So since this is a new group of people we're speaking with, I'll just give you a quick rundown of what that means. So we have a GAP program in place for the four presbyteries in New Jersey. So we insure approximately 175-ish churches on that program currently, and we've had that program in place now for over 30 years. It's gone through many different iterations and different carriers over the years, but last year we moved the program to Guide One, and we just moved the program through the renewal on 6/1 of this year for the first renewal cycle, and it's been a really good experience. Guide One has been a great partner for us. And the presbyteries and the individual churches have been very happy with what they have seen so far from Guide One on the program. I'm not going to go through this whole slide here. We will share this information with you so you can review it on your own. But this just talks to some of the different resources that Guide One provides, whether they're free resources or extremely discounted resources that each of the churches or the presbyteries can take advantage of. Things like the Safe Church platform that can talk about different risks and how to protect yourself on certain risks, abuse prevention, reporting systems, different things for cybersecurity. So there's a lot of resources that Guide One provides on top of what Brown & Brown can provide the churches and the presbyteries. So I just wanted to share this slide with you so you can kind of dig through some of that information at your own pace after this meeting. So here's what we're going to call some gap minimum coverage suggestions. So based off of what Morgan and I see from working with our other churches and what we currently have in place with the New Jersey presbyteries, this is a guideline of what we would say would be some suggested coverages that all of the churches should maintain and could be sort of the base minimum coverages we set for the program. You have your standard general liability coverages there that would include your professional liability, employee benefits liability with $1 million limit, sexual misconduct liability for $1 million limit, directors and officers, employment practices liability, hired and non-owned auto, especially if there is no actual owned autos by the churches where you have the auto policy. You want to make sure you have that hired and non-owned auto liability coverage. And then an umbrella policy or the excess liability that can range anywhere from $1 to, I mean, even up to $10 million if you would so choose. One thing Morgan and I have found now on our current New Jersey Presbytery program, we have a $5 million limit that's required of all churches to maintain. But we've been talking with the insurance committee for the presbytery, and one thing we might start offering this year is some additional ranges of an umbrella. So there might be some smaller churches who don't have as extensive as an exposure as some of our larger big steeple churches, where a $5 million umbrella might be overkill. and might not be affordable for a church. So we're going to start offering a $1 million or a $2 million option. The nice thing with the GAP program is we have that flexibility to adjust those coverages where needed. So even if we suggest these minimum coverages that each church has in place, if there's extenuating circumstances for certain churches where it's not affordable, they don't have as much exposure, and we need to adjust the coverages, we can do that on a one-off basis, and it doesn't affect the whole group. Again, each individual church rated on their own exposures, and therefore can adjust their limits as need be. Any questions so far as I'm diving through this? And we'll have time at the end too for some questions then if there are any as well. So here's where we get to one of the main things that Valerie had brought up to us last time, was figuring out exactly, okay, we decide we want to set up one of these GAP programs. What are the different options of how this program can be set up? So I'm going to just go into 3 different options of how we can work it. One option would be we set up a GAP program for the entire Synod of the South Atlantic. And basically how that would act is the Synod office, we would write the coverage for their policies, and they would act as the master location for the program. There would be one unique GAP setup, and then all of the states, all the presbyteries, and all of the churches would fall under this one master GAP program. Again, all still rated individually and all that fun stuff we mentioned before, but then there would just be one GAP setup, okay? Option number 2 would be a state-specific GAP setup, where we could have a master location designated for each of the 3 different states in Florida, Georgia, and South Carolina. We'd have those 3 unique setups, and then all of the churches can join their respective state-specific GAP. This is probably the preferred option of Guide 1, not to saying that you can't do the other options, but this one is the one that makes the most sense sometimes because of the different exposures that the individual states have, where with the wind and the tornadoes and the hurricanes and how they're affected in the different areas of the states, the state specific might be the ideal option when it comes to Guide 1's perspective. But again, they're open to setting this up however you decide is the best for your churches and for each of your presbyteries. And then the last option would simply be a presbytery specific GAP. So in this case, we would have 16 unique GAP setups, and basically we could have the presbytery's main location as the master location for each of these GAPs, and all of the churches join their own specific presbytery GAP. So there's pluses and minuses to each of the different scenarios. You know, from an ease of just, hey, let's get started and do this, it would be very easy to just start the overall synod and then everybody just joins as you please. The one thing I want to mention that makes this GAP program easy as well, as opposed to having one group master policy, is that the GAP program allows churches to join the program at any time. So when we start the GAP program, whether it's the overall synod or the presbytery specific GAP, we have that master location set up, and then whatever churches want to join, we can start adding those for, let's just say, what, we're in October now, let's just say April 1st, you decide you want to start this program. And we'll say Flint River Presbytery decides they want to be the first ones to go on this. We set Flint River up, we get quotes in place, all the churches from Flint River that want to join at that 4/1 date can join. But then let's say down comes December down the road, or October or November, any church decides, hey, you know what, I'm having insurance troubles, I want to join the program, you can join it at any time. There's no waiting for the policy term to renew to be able to let new churches join. So it's really come as you're ready, because we know this is a big decision for a lot of the churches and the presbytery and the synod as a whole to make. So it's not a forced thing where everybody has to join this at one time. We can figure out who is interested in the program, get that portion set up, and then as we spread this information throughout the synod and churches hear more about it and the presbyteries become more interested, we can then add participants to the program at any time. So one big thing we want to discuss that comes up is wind options and how wind affects the policies, the program, and all of that. So with the 3 different states, there's a lot of different deductible problems, deductible issues, depending on where exactly you're located. So there's a few different ways we can look at setting up wind options for the program. We can set it up individually, where basically just each church gets their own wind policy. It's an individual church property limit. You choose what deductible you're comfortable with, and we go that route. What might be a little more advantageous for the group, depending on how things are set up, is getting a separate wind group policy. And these limits are developed using modeling. So we have one specific carrier that we utilize a lot for these master type wind programs. And then we also utilize our complex property team located in Georgia. Morgan, is that right?
Atlanta. Yeah, they're out of Atlanta.
In Atlanta. So our complex property team also helps with this kind of stuff. And these limits are developed using different CAT modeling. So the nice thing about having a separate group policy outside of the standard GAP policy is that you don't need to purchase full limits for each individual church. So it becomes much more cost effective, and the total premium of the policy, regardless, can be broken out for each individual church. So you are responsible for your share of that policy, and you can still receive individual bills just like you do with the standard GAP program. So the master wind policy would come with a percentage deductible. And then you also have the option to buy a second excess policy to buy down that deductible to an even lower amount if that is what you would choose. And this next slide here just talks a little bit about the CAT modeling that our carrier uses and that our complex property team uses as well. So people that are a lot smarter than myself utilize all this information, such as location level information. It geocodes the locations. It looks at historical and simulated events and run it against the locations to generate what they would consider to be the potential losses. They figure out different loss curves and spit out these two numbers, a probable maximum loss and the average annual loss. And basically they're looking at huge time frames of what has happened in the past, what is potential to happen in the future. And that's where they figure out what is an acceptable limit to purchase for a wind event. Because the odds of a wind event damaging or destroying every single church from every single location that we're insuring is typically not going to be the case. So with the analysis that they do, we can figure out a substantial limit that would be purchased. And then again, each individual church would be able to break out their portion of the premium to get that limit on their policies, for their policies.
So just to interject here quick, Tom, Tom and I have had some great success in helping partners in Texas, because Texas had some real wind struggles a couple of years back, as well as North Carolina. So we were able to work with our complex property team and really model a program that was affordable and covered exactly what we needed it to do for each individual member church that was part of the group. So I know obviously with our coastal exposures, we're going to have to deal with that, but we have had some really nice successes in other areas of the country using this type of program and modeling feature that is available to us.
So, oops, now I got click happy. Let me go back real quick. All right. So one other nice feature of the GAP program through Guide 1 is the potential to earn loss control bonuses on your premiums. And you have the chance to earn up to 15% of your premiums back based on a few different things: the percentage of participation, the total premium levels, and your loss ratio percentage. So basically, depending on how many, it's all going to depend on how we set up the program, whether it's at the overall synod level or the state level or the presbytery level, determining the amount of participation we have on the program. So let's just say one presbytery, let's go with Flint River again, since I used it before. Let's say Flint River decides to join the program and they have 50 churches, and we have 25 of them that decide to start on the program right away. So we have 50% participation. That's how they determine the participation level. Premium levels are obviously just the package policies through Guide 1, the business auto policies, and those would factor into the total premium levels. And then obviously your loss ratio percentage. So depending on what kind of claims you have throughout the year and what that loss ratio percentage is, losses compared to your total premium levels, that's going to determine what potential loss control bonus you receive back. This next slide here shows the potential and what the bonus schedule would potentially look like. So let's go back to our New Jersey Presbytery program right now. They fall into the second column there, the 35 to 75% participation. And their loss ratio, knock on wood, for the last 2 years is falling under 15%. So they're on track, as if this year continues to go well, to earn 10% of their total premiums for the program back to them because of having that clean loss ratio. Now, that money that comes back, again, this is going to determine, it's all a matter of how we set up the program. If it's an overall synod level gap program, those monies, the check would be made to the synod, and then it's the synod's decision, along with all of the member presbyteries and churches, to decide how that money gets dispersed to the individual churches or the individual presbyteries. If it's on a presbytery level, same thing. Whatever the master location is, the check gets made to that master location, and then it's their job to decide how that money gets dispersed, and so on. So, you know, there's a few different ways that this type of thing can be handled. We're talking through different various options with the New Jersey Presbytery now of how they would potentially handle those return premiums. One thought is they're just going to potentially split it up evenly between all of the churches that are part of the program, so each church gets their exact same share. Another discussion has been, well, this church is paying a lot more than this church, so let's break it out on a percentage basis, figure out how much premium percentage for each individual church, and that's the same percentage of premium that they get back based off the overall numbers. Another thing that's been talked about is potentially holding on to that money at the presbytery level and using that almost as a fund to pay for deductibles for claims that happen with the various churches. So how you handle that money when it comes back to you is all up to you when that happens, but just wanted to share that is one of the nice bonuses that could potentially be out there for you with this GAP program.
Yeah, guys. So like those conversations that Tom and I have had to have with the New Jersey Presbyterians, frankly, have been really phenomenal conversations. And I get excited for them because I'm an agent, obviously. So I'm used to asking for money and saying, hey, this increase is going to be this. Hey, you're not going to have wind here. Hey, this is going to happen. It's phenomenal for me as an agent to go back and say, hey, look, guys, we're going to deliver you a check for 10% of your total premiums back. And how are we going to distribute that? So frankly, that's very exciting for me and for us to offer as member churches. You know, I'm sure some of the guys like Jules and a few other people are familiar with like captive insurance programs. And part of the huge draw to captive is you spend all that money because you have the potential to earn some back. Well, this isn't necessarily a captive program, but at least now the investment that you've made in insurance for a number of years can come in form of some return. So that really is powerful, and it's been really phenomenal, again, for our New Jersey partners and a few others that we represent as well.
And one other thing I'll mention here, and before we move on to the next slides, is, you know, another benefit of this program and coming together as a group, and again, the power of buying in numbers and having a larger group together is really shielding the individual churches from the individual fluctuations that happen on a renewal basis year to year in the insurance industry. So what we're typically seeing even now is 10 to 15 up to 20% increases year over year at renewal time for our single standalone churches. Now, again, that number will vary slightly lower for some and higher, even higher for others. But with the group program for New Jersey, the New Jersey Presbyteries at renewal time on 6/1, we were able to negotiate, and Guide One was happy with the performance of the program. So the overall program came in at a slightly under 5% increase for the overall year. So I think it was something like 4.6 or 5%, 4.6 or 4.7% increase on the entire program. And those are numbers that we're not seeing when we have churches outside of the program. So that's another benefit of coming together as a group to again, shield ourselves from the individual fluctuations we see out there in the market. Morgan, I'll let you jump in here.
Yeah, so obviously, guys, like how do we get started? How do we approach this? Tom and I have really taken pride in our team here, have really taken pride in trying to make it as simple as possible. The last things that we want to do is burden you or member churches, bog them down with worrying about insurance quotes. So for us, it can be as simple as current insurance policies, the loss history reports for the last 5 years, and Guide 1 does have some supplemental applications. So the supplemental applications are really where we get a lot of the core information that we need to go ahead and get started as far as the rating is concerned. In certain circumstances, underwriters do require additional information. Let's say that we support a school, an actual K through 12 school. Well, the underwriter is going to want a full educator's legal liability application completed, not just the religious institutions one. But the nice thing is our risk management team and us as a religious organizations team, we can help you guys make it as simple as possible. So I know Tom and I had a big project a few years back where we had to get the New Jersey program compliant with Guide 1 requirements in order to maintain the necessary abuse and molestation limits that we wanted. So we had a long project that we had to get some templates done. We did a lot of policies and procedures, a lot of education to the member churches in order to kind of get them up to speed and get Guide 1 comfortable with giving us a sufficient level of abuse and molestation and adding that to the umbrella as well. So I just mentioned that because our team can be certainly utilized as a resource to make it easier for you guys to obtain quotes and see the possibilities of the GAP program. The next thing I just wanted to mention is just rating considerations and just explain a little bit about what's important. So the big thing is general liability as far as the rating is concerned is square footage. So the carriers always want to know the square footage of the church and the buildings. For things like schools, daycares, preschools, it usually goes by enrollment, and that's just to account for the professional liability as well as the sexual misconduct. If the individual member church is renting the church out to a third party, maybe it's another congregation that worships there, all we really ask is usually the tenant square footage. And if there's any properties that we own or that we use, for example, we have a parsonage or a manse and the pastor lives there, we want to make sure that we have coverage for that. A lot of the times too, we have member churches that will obviously run a food bank, they'll be out and about in the community. We want to make sure that we're aware of that as well, that us and Guide 1 can rate for that, account for that, make sure that we have proper coverages in place. And then just some other things to consider, again, our international travel. Our team here does a lot of international travel accident policies. We do have a few member churches that are not only churches, but they're also kind of mission agencies. So they have a full-on international policy that covers them all over the world. But those things are something that you should consider, and member churches should consider. And then property, Tom, you can move on. Property is pretty self-explanatory. So a thing to note, and I apologize, is like Tom mentioned about each church having individual limits, individual liability limits, individual property limits. It's important to note too that each church is obviously rated on their individual characteristics. So their loss history and their claims experience. Those who haven't had many claims are going to get more favorable rates than those that have had claims. The COPE information, which is just the construction, is there protection within the building? Are there sprinklers? Square footage, the updates, and then obviously things like location, the exposure to cat, the crime scores, things of that nature. And then finally, some other unique things that might want to consider are artwork, are potentially things like musical instruments, any audio visual equipment, things that need attention above and beyond the standard quote unquote insurance policy. Those member churches should let us know. And all that stuff that I just spit off, guys, is on the supplemental applications for Guide 1. I just wanted to point it out to you. And something that Tom and I have done in the past that works out well is if we get up and running and now we have, members that want to join our program, we've actually set up a separate email out of our office. So that way prospective member churches can just simply send an email to hypothetically South Atlantic Synod at bbrown.com. and it will come directly to Tom and our team, and we'll be able to get stuff turned over quick. And it really has streamlined the process for us.
One thing I want to step in and just mention real quick. I know I mentioned it before that, and we keep saying it, that each church is rated on their own individual characteristics in this, and we have a lot of flexibility with this type of program. Another big flexibility piece comes on the property side when we're talking about property deductibles. So we know a lot of churches like to have lower deductibles, $2,500, $5,000 deductibles. But then there's also churches who are willing to take on more risk and are willing to have the higher deductibles. $25,000 deductibles are not rare, and just try to help keep premiums down as well. So there is flexibility when it comes to things like that, depending on what each church decides.
And then just a quick little mention here about the resources that we have in the event that we are able to partner with each other. We have an unbelievable amount of resources here within Brown & Brown. And the thing that I like kind of goes back to our initial slide where I introduced Brown & Brown is it's not just within Tom and I's four walls. Us being a national company, we can go to anybody and almost get anything accomplished. But within our office here, we always utilize our risk management team. Our claims team is phenomenal and superior. So if there's an issue with the church, our claims team hop in. We have very close relationships with our carrier partners. Each member church would get a dedicated team internally here for us at Brown & Brown. So Tom would assign them with an account manager. There'd be an agent assigned and an account technician. And what we've really found is that creates great continuity between us and the member church. It's nice when you can call the same person and you get that rapport built up with that person. So we kind of pride ourselves on that, but we offer things like custom training materials, proprietary tools that our complex property team uses. Tom and I do a lot of live webinars along with our risk management team to kind of keep the presbyteries and the member churches educated on hot topic things. We have a surety bond team, our employee benefits team. So we have, that's just a long-winded way of saying we have a lot of resources to help your members and yourselves. And the thing that Tom and I kind of beat our heads with sometimes is our clients don't utilize us enough. So Tom and I want to be out and we want to be able to provide a lot of education for churches. Hey, what's the best way for you guys to save money on your renewal? What's best practices as far as letting people use our facility? How do we prevent hurricanes, or how do we prepare and mitigate for hurricanes? Those type of things. We can certainly do customized webinars for your members. And it's nice because Tom and I have done them for individual presbyteries, and then we've also done them for groups, and then we've also done them for individual churches. So the scope of variety as far as the opportunities are wide and vast.
And hopefully, if everybody's still awake after listening to Morgan and I here, we're free to take any questions on anything we discussed or any other questions you might have in your minds. What do you got for us? Don't be shy.
I hate to ask and be ignorant, but the GAP program itself, that is the whole insurance. That's not GAP like we have our own insurance and then this is additional insurance. Is that right?
No, yeah, that's just the name of the
Okay.
program. It's just called a group affiliated program, or GAP. No, it's not like Aflac GAP insurance,
Yeah.
Or where you need other insurance. It's not that. So thank you for asking though. So I'm sure somebody else had that question, was afraid to ask too, but that's just the name of it. So yep.
Okay. Thank you.
You're welcome.
Camille Josie here. I think I heard you say that in the New Jersey GAP program, they had kind of an average 5% increase in premiums at renewal this year.
Yes, it was. I think it was like 4.6 or 4.7%. Yes.
Okay.
Yes.
I have a question.
Oh, go ahead. I'm
sorry.
sorry. Go ahead, Karen.
I talked with our presbytery, and Tampa Bay does not have any established minimum. The only thing that they have is the requirement. So there is a minimum in the Book of Order, I think. I heard that or read that. I think you all told us that last time. So how, having no specific minimum, how would that, who would decide? Would it be the presbytery to decide, or what if they don't want to set a minimum? How does that affect some of the things you're telling us?
Sure. So there does not have to be a minimum set. Now, what I would say is from just, let's just say, a general liability standpoint, $1 million per occurrence general liability is going to be the minimum that we would even write for
Okay.
any church. But you don't have to set minimum limits at all if you choose not to. If for some reason you say, okay, yeah, you got to have $1 million liability limit, but it's up to each individual church what they decide what they want for an abuse and molestation limit. You say like, okay, it's okay if you only have $100,000 limit, or no, you have to have $1 million limit. You can leave that open. And again, depending on the setup of the actual program, if it's the overall synod, and then there's some sort of insurance, like with the New Jersey program, they set up an insurance committee with 2 members on that committee from each presbytery. They came together as a group and said, these are the minimum coverages we need to make sure each of our churches have to make sure our butts are covered for anything that would potentially happen. That was their decision to do that. That doesn't mean you have to do that. But you can make that call for each setup as to what you decide for each limit.
Karen, I'll provide a little color to that. So originally, I don't know, before Tom and I even got here, there was no guidelines, there was no minimums for the New Jersey program. So everyone was just doing as they pleased. Then what happened was we had a lot of churches who were financially struggling and they wanted to shave premiums. So they were removing coverages like directors and officers. They were removing coverages like sexual abuse and molestation. There was no checks and balances with anyone from the presbytery or frankly from our side at Brown and Brown. So we didn't know that that was a huge problem until a claim, until we had a member church who had a sexual abuse claim and they excluded the coverage because they declined it a couple years back. And then what happened was it rolled up to the presbytery level. And now because there was no coverage on the member level, the presbytery's coverage had to step in. And honestly, it got very, very messy as far as how the claim was paid, who was involved, how negligent was the church. So that is kind of what spawned the formulation of, hey, these are suggestions and minimum requirements. I do know that the National Book of Order does have some suggestions as far as limits are concerned. But like you said, Karen, they're just suggestions. Where New Jersey a few years back, maybe 5 years ago, where they really kind of took a stance was they told us, and we worked with them and said, like Tom mentioned, these are the minimum coverages that if you are in our 4 presbyteries in New Jersey, you have to have at least this minimum of coverage. And they actually allowed us to kind of quote unquote enforce that. So if a church says, hey, I'm really financially struggling, I need to eliminate my abuse and molestation, we'll hop on the phone with the stated clerk or whoever is designated at the presbytery, and we'll talk through the situation. And then maybe we meet in the middle. We don't remove all the abuse and molestation, but we take that limit down from $1 million to, like Tom mentioned, 100,000. But that is kind of why New Jersey decided to go with the minimum requirement type of model, is because the presbyteries themselves found themselves in a little bit of hot water for certain scenarios.
Okay, now maybe I was thinking about something else there, but it brings up another question. If we're talking about Brown and Brown talking to Tampa Bay Presbytery, say, are you talking to the stated clerk? Are you talking to the board of trustees? What is the communication line look like?
Sure. I'll let Tom talks to our presbytery leadership a lot. So Tom, you can elaborate on it. I know that I have contact a lot with a stated clerk, and then members who are designated on this insurance committee. So a few of them are just involved in the presbytery, but they're actually members at a church. The one gentleman worked for Chubb for a long time. Another person had an insurance background as well. But I'll let Tom kind of put more color to that.
Yeah, so when it comes to the communication between us and anybody, you know, it depends. I'll go back again to the discussion of it depends how we decide to set this program up. So let's say we set this program up on a state level, and then you have let's just say 5 presbyteries in the state. You know, there should be some leadership from each of those 5 presbyteries that are kind of getting together to discuss how they want this program to be set up and things like that. But on a day-to-day basis, or when it comes to the actual insurance needs for each of the individual churches, we're communicating with the individual churches, and our team is communicating with the individual churches. So there's no responsibility on the presbytery or the synod to be relaying information back and forth for the individual churches. We're going to work with the individual churches. But if you set up like our New Jersey program said, all right, we have our 4 presbyteries, we want to have an insurance committee that is all we focus on is insurance for the group, then we can have quarterly meetings like we do with them to discuss insurance issues or problems that have been going on for certain issues. But there's really nothing that we can't do from a communication standpoint, but there's no need for us to have communication with a certain person. Each individual church will be communicating with us when it comes to quoting, when it comes to certificates of insurance, any insurance related needs. We'll work with the individual churches. It's all dependent on you, how you want to set up the program and what kind of communication you would want to have on a regular basis on a higher level, if that makes sense.
Yes, but that wasn't really my question. I didn't
Okay.
explain it well.
Okay, go ahead.
The Board of Trustees in Tampa Bay Presbytery makes a lot of decisions and recommendations that go to other places. Okay. Let's say if we didn't want to go with the state thing, we might want to go with the synod thing or the presbytery thing. I'm just making this up. I don't.
Yep.
Okay. So what is the line of communication between you and, let's say, Tampa Bay Presbytery, if we wanted to go presbytery option? Because we have decision makers at the presbytery level.
Yeah, I mean, if that's the case and the presbytery makes the decision and says, listen, I don't care what the rest of the synod does or what the rest of the presbyteries do, Tampa Bay Presbytery, we've decided we want to be our own GAP program, we want to move forward with this program, then we communicate directly with whoever you tell us we need to communicate with to get things up and running and get things set. That can be direct communication with us. That's kind of how that would work. There's nothing crazy about it. Again, this conversation we're having today is really just for us to lay it all out there so you know what options are available, and then how you all decide to break things up and move forward, then we can communicate directly with whoever is going to be kind of the point person, whether it's the presbytery, the state, or the synod.
Okay.
Yeah. So Karen, if on the presbytery level, again, it's usually the stated clerk and or executive presbyter. Those are the 2 main people that we contact with. So a lot of times the board for New Jersey, the board will make decisions, communicate that to the stated clerk, and then the stated clerk will be the one reaching out to us at Brown & Brown saying, hey, the board decided on this. This is something we need to change.
Okay, so you really don't care who makes the decision.
No.
Those people are the communication link, obviously, but it wouldn't matter to you if it was the Board of Trustees or the CT committee or whatever.
No.
Okay,
no, or
thank
the
you.
finance committee or property or yeah.
Whoever you tell us is the main point of contact, that's who we'll go to.
I understand. Thank you.
I have a number of questions. May I?
Of course.
Oh boy, you're not going to be difficult, are you, Valerie? Come on. Now.
Well, no, I want to first, before we completely lose the example that Morgan provided us with the church that cut back on their sexual molestation coverage or whatever it was, and then you said that it rolled up to the presbytery. Now, my question to you about that particular instance is, did it, because of the church's failure, did it roll up to the presbytery because of the Presbyterian system, or is that, or is the gap setup with New Jersey itself, those presbyteries, is that part of the insurance, part of the program?
Oh, no, that's a good question, Valerie. It was because of the structure of the presbytery.
Okay.
So because that presbytery was the overseeing
no,
body
I get
of
that part.
church.
I get
had
that
nothing,
part. I'm looking
it had
for.
nothing to do with the gap. It was essentially just because of the structure.
Okay, that's much more clear to me now. Thank you. What about it's my understanding, and Milana, I'm gonna ask you to jump in if I'm wrong about this. It's my understanding that there are some churches in Florida that have either lost their coverage from Guide 1 or have, it's been in, the cost has gone through the roof. How would they, if they've been denied coverage, would they be able to get coverage through this GAP plan if Guide 1 has denied them previously?
They would. And to Tom's point before, now I can't say generally every single case would, but Tom and I have seen this in the past in New Jersey specifically, where Guide 1 worked with a client 3 years ago, they non-renewed him for losses, and now this person wants to join our program. So that is a huge benefit of the program, is because we have the ability with the group buying power to have Guide 1 be a little bit more flexible on a case-by-case scenario. So to your point, Valerie, maybe they're not going to come in and offer the same premium level that they did before the losses or something like that. But more times than not, they're able to offer a level of coverage and at least have that member being a part of the program. Another point to that too is they are very flexible as far as, let's say, the property has been a huge problem because there's been a ton of losses. Well, now they can offer them a general liability portion into the program and all the liability exposures, and then the property we can place with Guide 1's excess and surplus potentially lines as well. So there's still ways for them to be part of the program, even in those type of adverse scenarios. And even if they were with Guide 1 a year ago and then they were non-renewed.
Okay, that's helpful. Thank you.
Oh, excuse me, I don't think most of us understand excess and surplus.
Yes, thank you, Jules. So essentially the excess and surplus is a non-admitted carrier in whatever state you're located in, Florida, Georgia, South Carolina. So essentially what it really means is the carrier is not housed and admitted and has a location, quote unquote, in the state that you're in. And they're not backed by that state guarantee association. So traditionally, to Jules was in a insurance, so he knows, but traditionally the excess and surplus carriers, there's a lot more restrictions. The coverage tends to be a little bit more expensive. And they are used, and that marketplace is used for adverse situations, like when we can't get any insurance coverage because of losses or locations or things like that. Does that make sense to everybody?
So that was going to be sort of one of my questions. If you have a claim, can you get canceled out of the GAP program?
Technically you can, Susan, but
Okay.
in Tom and I's experience, we haven't had that yet. Right before I hopped on this call, I just was on a phone with a member church from New Jersey, and the guy has had 4 wind claims. This is his 4th wind claim in 5 years.
Okay.
And I was like, oh my gosh, this is going to be terrible. Like, what's going on? So last year he had a tree blow over and fall onto the man. So it was like 55 grand worth of damage. Now he just had a tree that fell onto a decorative fence as well as some headstones at the church. Last year, and so it doesn't sound like it's going to be that bad, but last year I was really nervous that this guy was going to get non-renewed immediately because he had wind claim history from before. He got a 4.5% increase on his policy.
So
and
typically what we see is,
I was shocked. I was so happy and thrilled for the gentleman.
Yeah, and you're typically not going to get non-renewed off this type of program unless there's a situation where you are having claims and Guide 1 might be making recommendations to help you prevent those claims, whether
Right.
it's having proper policies and procedures in place, or if they do an inspection of a property and let you know, like, hey, your flashing on the roof here is going to be a problem, you need to fix that. And then all of a sudden you're filing a bunch of claims and you're not keeping up with their recommendations. That would probably be the main reason you would get non-renewed from the program. But just having standard claims that are the normal claims that are out of your control, you typically would not be non-renewed from this type of program.
Okay, great. Thank you.
As we begin to talk about whether or not or how this might be, the how and the if of how this might be set up, whether statewide, presbytery-wide, what I'm understanding is there has to be a main organization, which would make it difficult for that to happen statewide, I think. It would just be a little more cumbersome, I think. I think that I understand why Guide 1's preference would be statewide, because Florida is a lot different than Georgia. But it's for that very reason that I would hope that there would be a benefit for our congregations to do it synod-wide, because, again, I'm displaying my ignorance, but wouldn't the less wind exposure in Georgia help Florida?
So Valerie, to your point, it would, depending on the participation levels. So like, let's say that we had, because again, to your point, if most of our churches were concentrated in Florida, let's say we have a synod level program, most of our churches are located in Florida, and now we only have a few in Georgia and a few in South Carolina where our wind exposure isn't as great.
Right.
Well, now Guide 1 is going to look at that and they're going to price it appropriately with a little bit more of a exposure to Florida.
Sure,
now,
sure,
where it really all does go back is kind of to what Tom mentioned before. Each individual church will still be rated on their own merit. So just because we might have more exposure in Florida, we'll still get the rates in Florida, and the people in Georgia will still get the benefits of not having that cat exposure in Georgia. On the highest level, when we're looking at like our potential loss control bonus that Tom mentioned, that is where it could potentially really affect it. So I only say that because we have about 800 member churches within the synod. So if we have 800 member churches within the synod, but then we have a synod level program, and then only 20 participate in the program, well, now our potential credit is not as great as if it were a presbytery with 20 churches in it, and now all 20 churches are participating in the program.
Right.
Does that make sense?
Sure.
Yeah.
Sure. And like you mentioned, Valerie, with the state specific too, like with New Jersey, we have the 4 presbyteries in New Jersey, and so it's basically a state level GAP program, and they just decided they picked one of the 4 presbyteries to be the main headquarters location. They just came to the decision and said, hey, we'll just use you as the head, because there's really nothing that they have to do. There's no benefit. There's no obligations or anything. It's really just labeling, okay, we're going to make you the head, just to put them on paper as the head organization. So there's nothing that really goes along with that. And just the only thing would be if there's a loss control bonus, it does go to that presbytery. But again, you're all going to be working together to figure out exactly how that stuff gets dispersed and how it happens. But there's really no significance to what the master location of the program is. It's kind of just a figurehead.
Okay. So, but when you use the term location, so they don't have to necessarily have property.
No. Okay.
Not
at all.
Because I know several of our presbyteries
They don't have
either own or rent property. They're virtual. Just
they're virtual.
Yep.
We started doing that as well. Well, not we, but New Jersey started doing that as well in the last couple of years. It's just going more virtual.
Yep.
In regards to property, many of and it may be the same case in New Jersey, but many of our larger churches are historic. Buildings may have been built in early 1800s. It's, replacement cost on some of those structures can be a challenge. Have you found God one to be flexible as taking a look at the older churches?
Yeah, Jules, they're really good because to your point, up here in the Northeast, we have so many churches in New Jersey, New York, even Pennsylvania that are on the National Historic Registry. So they work with us very well as far as the reconstruction costs, what the true valuation would be. The only thing that we're not able to get for a historic church is a blanket limit. So they no longer give us a blanket limit, whereas a church that is not on the historic registry, they're able to have the parsonage or the manse, the everything into one blanket limit. So let's say we have 3 locations at $25 million a piece. They have a blanket limit of 75 million. They're not allowed to do that with historic churches.
And that was a decision of the New Jersey presbyteries. They decided they wanted to have blanket limits for all of the buildings for each individual church and all the business personal property at each individual church. You might decide that your churches don't need to do that or don't want that, but that is one of the things. All of their property and business personal property is blanketed for each individual church, except for those buildings that are on the historical register. They cannot be included in the blanket, but we're still getting replacement cost, agreed value on those historical properties.
Good. How about premium payment? There's a real cash flow issue with a lot of the churches. Y'all do monthly installments, or how do you do it?
Each individual church can decide what payment structure they want to be on. So our program was initially in New Jersey, was set up on quarterly payments. That was kind of the standard. But you can do a 10-pay structure, a monthly structure, a pay in full, flexibility for each individual church to decide how they want to make their payments.
And frankly, Jules, the Guide One billing department is getting to know us and our team very well. Because to your point about cash flow, we have to call often and say, hey, we're going to be a little bit late on this payment. We're going to be a little light on this payment. So I joke about it, but they are very, very flexible and they are very nice to us and our members. So
good.
Thank you so much, gentlemen. This has been really, really helpful. I think I actually understand most of what you said, so this is really helpful. We have Karen, you have other questions?
Yes, I do. And I think this probably is not the right place to ask it, but I don't know else who would ask. Let's about the sexual abuse kind of a thing. Okay, so let's say in a presbytery, since I've been using that structure, and a church has X amount of insurance against that. The presbytery doesn't have any specific amount, and there's a claim against this church. Is whatever that church is carrying, is that the limit? This may be a legal question, I realize, but how does the claim carried by this insurance policy dance with the legal things? Could they then sue the presbytery or the synod? Or
well, I think it will help, Karen, for me to explain kind of how the claim that I referenced earlier got to be. So that church didn't have any abuse insurance. So now there was an allegation. The claimant sued the church. The attorney for the claimant then realized that the church had no sexual abuse coverage. So now the claimant and the attorney tender papers to the presbytery because the presbytery did have abuse and molestation, and they also cited the presbytery as being negligent as far as overseeing the church, overseeing their insurance policies, being the governing body of that member church. And to your point, so let's say there is an allegation for a member church, whatever amount of misconduct, sexual misconduct insurance they have, is what is going to be paid. If it goes over top of that, that is a situation now where the presbytery can be involved or someone can be involved. But for the presbytery to get involved, they have to have legal action and paperwork tendered to you. So it's not like in every abuse claim, the presbytery is going to be involved. There has to be a reason that the presbytery would be involved. I just used that claim scenario earlier because the presbytery had no knowledge of this church dropping their coverage. They didn't know. There was no checks and balances at the time. So they were just as surprised about being tendered this paperwork as we were as an agent.
And one thing I want to mention there that since it came up, one nice thing with this GAP program, at least the way we have it set up with the New Jersey presbyteries right now, is they have as a minimum requirement the $1 million sexual abuse and molestation limit. They also have a $5 million umbrella limit. And the nice thing is Guide 1 has allowed us to have a sublimit on that umbrella for additional $2 million to go towards abuse and molestation on that umbrella policy. So a lot of carriers aren't willing to throw that abuse and molestation under that umbrella limit. Guide 1 has allowed us to do that. And it's an important thing because, you know, typically when we see larger claims for a church or a nonprofit organization, a lot of times they're coming from the sexual abuse and molestation coverage. So if we don't have that limit to roll up under that umbrella, it can become an issue. So that's one of the nice benefits of the program as well.
Thank you.
Yep. And the statutes that we've had to deal up here with in New Jersey, New York, again, Pennsylvania, Delaware, have been difficult as far as the abuse and molestation is concerned. In 2019, there was the Child Protection Act was filed and approved in the state of New Jersey, which essentially opened up the statute of limitations for potential victims. And that really created this squeeze up here in the Northeast for the abuse and molestation limits and higher limits.
So how do y'all handle, say, just ABC, Presbyterian Church, wherever their session or their diaconate would like for someone to come and explain the coverages? How do y'all handle that, being where you are located and so forth?
Yeah, sure, Jules. Well, Tom and I do this very often, as far as explaining coverages, meeting with boards, meeting with the session. I would love to come out to Charleston and visit you guys because I would love to hang out down there. But, we really do utilize technology. Now, let's hypothetically say that fast forward a year down the road, and now we have a really good established relationship and we all want to get together. Tom and I will certainly travel and come down when necessary to explain, meet with a certain presbytery, do all that. But in the intermediate, and usually we do very well as far as Zooms and Teams are concerned. I've done them, Jules, on phone calls. I don't prefer that, but I've done them as far as just a straight conference call with all of session in a room, and they're just peppering me with questions. And they have, their policies in front of them, and they're asking what this is, what this limit is. So we are very flexible as far as how we can, get that accomplished.
And the nice thing is too, is the carrier Guide 1 is willing to get involved with this stuff as well. So when it comes to even traveling down there to the different presbyteries, Guide 1's risk management religious organization section would be willing to travel with us or on their own to come down and provide presentations. Not only Morgan and myself, but our risk management team has also done live webinars. We have a full brochure of free webinars that we put on a monthly basis for things like abuse and molestation and safe driving and different things that we can give you access to as well. So there's a ton of different resources outside of just Morgan and myself to be able to come see you all or to just get everybody together on a meeting like this. There's a plethora of options.
Good.
Other questions? Well, thank you so much, Thomas and Morgan. I'm really grateful. We are all really grateful for your time and all the energy you put into preparations for this conversation. We have obviously a lot to talk about. So to those of you on this task who are here to learn more and to, do all this research together, the next thing I'm going to do is send an email out to the entire group with the recording of this meeting. I will and a doodle poll so that we can establish the next time that we meet. I'm also going to be reaching out to the insurance board to ask them if they want to talk to us about a similar type of program, and then we will and then I'll let you know where we end up with that doodle poll and how we can get together again with questions. Thomas, do you have anything else for us?
No, just appreciate you getting this set up for us, Valerie. We love being able to share this information. We're excited for the opportunity to work with you all. We're hoping we get to work with you all at some point. So as questions come up, if you need more information, if you need to have more of these calls, please let us know. We will do whatever we need to do to get back on these calls and forward information along as you require it.
Thanks, Thomas. And I assume since you sent me the PowerPoint, it's okay if I share it with everyone else.
Disperse it to whoever you need to disperse it to.
Awesome. Thank you so much. I appreciate it.
Thank you, everybody.
Thank
you.
you. Thank you very much.
Take care.
Take care.
So to the rest of you, is there anything else that you think I need to send out with this next communication this afternoon?
Yeah, I think when the recording comes through, when it's generated, if you would include that, but the PowerPoint's a helpful guide.
Yeah, you'll get the
walk through that.
PowerPoint, the recording, and a link to a doodle poll to help establish the next time that we meet. I hope to find sometime in November, because I think we want to avoid Advent as much as possible.
Please.
But yeah. But November is also a crazy busy month at the mid-council level. So I will I'll try and find a couple of dates in there somewhere. Okay.
Great. Valerie, thank you very much for putting this all together.
Certainly. Thank you all for being here. I am grateful for this conversation. It's been really good. Y'all have a blessed day.
Thank
Thank
you.
you.
Take care.
Bye-bye.